Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is a daily technical analysis of foreign exchange markets. I'll start with Euro against the dollar. A second bearish black crow on Friday and a follow-on low to the previous session's reactionary bearish dark cloud cover pattern. Prices once again found a cap in a declining long moving average overhead, currently at 103.97, but this time not only punched down through but also closed below the congestion between 103.38 and 103.69. Further up beyond the long moving average, we have the February and March 2017 lows at 104.92 and the upper time, currently on 104.90, of the broken but seemingly still influential January to May 2021 bearish Andrews pitchfork. This all highlighted once again the two recent core patterns that we have here. We have a September to date ascending triangle and a September to date ascending wedge pattern. That's currently the last one at 98.76 to 101.90. I've highlighted the ascending wedge pattern in blue to show you a clearer picture of what I'm talking about. Both these patterns have had false breaks in both directions, which complicated things and have compromised both patterns. However, both patterns have repaired themselves, and 2 weeks ago saw a clear break above the upper trend line of the ascending wedge pattern. This left us with topside opportunities. We've already seen the market reach and exceed the primary and secondary targets for the ascending triangle pattern, so these have been retired. We still have live the possible targets for the ascending wedge pattern of a primary target X2 in the 105.35 area and a secondary harder to reach target X3 in a 107.65 area. Now so far today, a further continuation lower, though moving down through some clear air and approaching the upper trend line of the ascending wedge pattern as the next support. Cable, aka sterling against the US dollar. A third countering bullish harami on Friday and also a possible shooting star pattern, though for a while I contemplated calling that last part the possible inverted hammer pattern. To be honest, I'm not really comfortable with either of the last labels, but to call it just an indecisive spinning Todd would also, I suspect, not be wholly appropriate. This follows on from the previous session's wannabe daily key reversal down that ended up being a less aggressive counter to the counter bearish engulfing pattern. The market finished still sitting just above the upper trend line, currently at 118.16 of the recent ascending wedge pattern. Now, much as in euro dollar, there are two core patterns here. I've highlighted the relevant trend lines in blue to help visualize what is going on. We have a late September to date ascending triangle, currently at 114.76 to 115.06, which is almost coming to an end, and also a September to date ascending wedge pattern, currently 114.76 to 118.16. Both patterns had previously been compromised and both have repaired themselves. Late last week there was a break higher above the flat trend line of the ascending triangle, giving possible targets for this pattern on the upside of a primary target X in the 120.20 area and a secondary harder to reach target X1 in the 122.5 area. Last week the market managed to reach the primary target X before pulling back. We'll see if there is still sufficient bullish incentive to reach up to target X1. Meanwhile, with the consecutive closes over the upper trend line of the ascending wedge pattern, I decided to lay out some possible upside targets for this pattern. Thus, a primary target X2 would be in the 124.20 area and a secondary and harder to reach target X3 in the 128 even area. Now so far today, a move down below the upper trend line of the ascending wedge pattern, but only just at this time. Looking below, we have the flatlining medium moving average, currently 116.37, and the flat upper trend line of the ascending triangle, currently 115.06 below. Euro sterling, a bearish black crow and a significant close below the recently highlighted roof pattern, or sometimes known as a half diamond, constructed over November. Thus, this gives us the following potential targets on a downside of a primary target X in the 86.02 zone and a secondary and harder to reach, much harder to reach target if I'm honest, target X1 in the 85.45 zone. Interestingly, this move down and low close on Friday was also the first close below the broken but since repaired or seemingly repaired lower time currently at 87.09, of the April to August bullish Andrews pitchfork. This support, as I had previously stated, was a more serious support, so such a close below is significant. I'd also like to point out that there is no finessing of this bullish Andrews pitchfork into a less aggressive bullish shift pitchfork. It's not possible. Below we now have the April 2020 low at 86.69. In between there's a free air below until the flatlining medium moving average, currently at 86.12, which is currently just above target X. Now, so far today, a move up to the base of the roof pattern at the lesser Fibonacci line at 86.98 before a turn back down and push down through the April 2020 low, but seemingly not in an aggressive way, as prices seem to be hesitant around this old low. US dollar against the Indian rupee. A fifth bullish white soldier on Friday, and a possible settlement of the question I posed last time of whether the pattern last Thursday was either a possible shooting star pattern type 1 bearish or a type 2 bullish pattern. To recap the differences, a shooting star type 1 bearish is a one-day bearish pattern seen at the top of the rise. A shooting star type 2 bullish is a two-day pattern that superficially looks like a type 1, but when taking into account the previous session, becomes a bullish pattern. The past two sessions have elements of a type 2, not all of them. The key missing part was a gap between the sessions, but as this is an FX market, foreign exchange market, and gaps are not that common, I previously gave this one some leeway, and thus looked at it as a possible type 2 bullish pattern. Today's action justifies that view, but before that I wish to discuss the larger scenario, which I'd previously mentioned in my earlier commentaries. So I'd highlighted the September to early November ascending expanding wedge pattern. You can see that in blue on my daily chart. Then late 3 weeks ago, prices pushed down through the lower, and the move lower since then until 2 weeks ago confirmed that pattern. This gave a primary target in the 1890 zone and a secondary harder to reach target X1 in the 8028 zone. 2 weeks ago the market reached the primary target, but we've since seen the market fail at pierce down through the rising medium moving average below, which is really looking quite good support at the moment, currently at 80.60. Such that I'm now wondering if perhaps, just perhaps, reaching the primary target may have been enough for this market. This requires a little more contemplation and some further data over the next few sessions. In the meantime, I have drawn a fresh September to mid-November bullish Andrews pitchfork. First one for a while. US dollar against the Brazilian real. An interesting pattern on Friday. A hanging man pattern, and it could also be seen as a bearish engulfing pattern if only just. It appears to be a pause in the market's recent bullish action, which may also be associated with the long tongue the market had on the prior session. In a bigger picture, the market has now closed for a third consecutive time, if a little unsteadily, over the upper time, currently at 536.22, of the breached July to late August bearish shift pitchfork. This is still on the edge of ending of its career. It's really on the edge of ending of its career as a capping pattern. Interestingly, the market closed right on the previous resistance, which is now support, of the lesser Fibonacci line at 538.13, though the market had indeed punched down through both this Fibonacci line and the lower time on Friday. Looking overhead, we have the lesser Fibonacci line at 543.81 plus the July high area congestion around 550 even, and congestion at 552.46. Now, whilst looking further below, we still have the 50% Fibonacci line of the May 2020 to April 2022 move at 527.37, which I continue to say does not look that good as support, though the other slightly lower 50% Fibonacci line at 522.76 of the March 2021 to April 2022 move does look a better support. I suspect the latter may be due to the conglomeration of moving averages nearby, acting as support, and notably the short moving average currently at 526.05, the short medium moving average currently 525.11, and the medium moving average currently 524.60. Two additional points. Firstly, we are set to make a monthly key reversal for November. Thus, if we close on the 30th of November either over 541.54 or under 517.90, then we'd be on. Right now, we're actually looking at a lesser cousin of the monthly key reversal, an outside month. Secondly, I needed an extra day to make sure, but we had a golden cross late last week, if only just, of the short medium moving average up over the medium moving average. US dollar against the Mexican peso. A second bullish white soldier on Friday, and confirming last week as a bottoming action. Overall, the recent moves lower all relate to the previously highlighted crossover combination, the broken upper time currently at 1954.70 of the March to July bearish Andrews pitchfork, and the middle time currently 1974.09 of the still intact bearish shift pitchfork for the same move. The market pushed up higher from the now support of the May low at 1940.70 and was capped, unsurprisingly, by the combination of the still influential 2021 low at 1953.63, plus the broken upper time of the bearish Andrews pitchfork. Now, so far today, a fresh attempt higher, testing up to the combination of the 2021 low at 1953.63 and the broken upper time of the March to May bearish Andrews pitchfork. And this is where it gets interesting. Just above these two resistances, we have some congestion from about 1956 to 1958, dating from June, and then also the high from 2 weeks ago at 1963.30. Thank you for listening. This short version broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.